The company BYJU'S, which is in the midst of news, is back in focus. It is in midst of a rejig now and looking to sell its subsidiaries, Great Learning and Epic, to raise money and repay the $1.2 billion term loan B it raised from lenders in 2021. Now, news coming in that BYJU'S lenders have appointed the risk advisory firm Kroll to safeguard quote-unquote charged assets used as collateral to secure loan, allowing the lenders to seize them if the borrowers default. Now, sale of Great Learning and BYJU'S Singapore entity will be jointly carried out and coordinated by the edtech giant as well as its lenders. The startup is hoping to raise about $800 million to $1 billion from the sale of the two assets. Now, this comes at a time when 6 of BYJU'S biggest investors have constituted an informal working group to engage with the company and track its progress as well as provide suggestions. The group, which has now been formed, includes some of the largest investors of BYJU'S such as General Atlantic, Prosus, Peak XV, Sofina, Chang Zuckerberg, and more. The working committee comes 3 months after 3 key investors, board members, stepped down. Srinath Sridharan joining us on the show to discuss the BYJU'S ongoing saga. The saga, Srinath, continues. Lots of news items coming in from BYJU'S kitty this afternoon. But let's begin with the working group. Quite interesting. Months after the board members resigned, they are back. And this time, in a capacity to advise, they formed a working group, a working committee, where they will be interacting with the management of BYJU'S.
I mean, I can't speak much about the governance expertise of the governance experts. Some of them did issue a book recently launched a book on governance, and yet they stepped down from those boards and today want to have almost influence on management decisions of this entity. So it's something remarkably startling. They're trying to protect their valuations or their assets on the equity side, and yet the same company has challenges on the debt side. And as we have spoken before, debt will reign supreme than equity. So if they can solve for the debt issues by paying off those debts, I think equity they can salvage. Otherwise, it's going to be impossible. And Shweta, I mean, how is it looking like? Today, if you look at the board, there are no major shareholders on the board, which means all these investors, none of them have a board seat. 2, there are no independent directors on the board. So it's literally almost like the 2 founders fighting the rest of the shareholders, and with the world watching and with people like us commenting, right? So it's very interesting is how are they going to actually salvage this situation? Governance or no governance, a business or no business, they need money. And the challenge is they now have a new CEO of sorts. They will bring in a new team. There is also conversation about in Great Learning, the management or the original sellers are ready to buy it back. So all these conversations are going to unfold, but there are no really answers. This has been going on for far too long, and this is not a easily monetizable asset. I mean, edtech, I mean, it's no more fashionable. They made it fashionable, and it is for their own reason that it is no more fashionable.
Okay.
Okay. The one thing I want to ask you at this stage is this: there is that talk of those who exited the board, the investors who have exited the board, forming a consortium and sort of taking on BYJU'S. I want to understand how much of an impact do you think that's going to have on the proceedings and the recovery process of BYJU'S per se? Because let's face it, at the end of the day, we would all prefer that BYJU'S fixes all of its issues and finds a way back to good health, and let's go off all that's been plaguing what's been plaguing it so far.
So let's look at it, Krishna. Let's look at it from the regulatory framework. I mean, you as a shareholder, as an investor, sat on that board, and you said that I didn't know about a lot of these things that happened. My shareholding has come down, so I exited. Today, by sitting outside, it's almost like sitting on the fence and saying that I want to have a say in how this company is being formed, or I'm going to put pressure on the company. I mean, do you think it really is going to materialize? This is an unlisted company, a private company, and you don't even have a board seat. I mean, I'm assuming that these are going to be challenges because if the founders never listened to you when you were on the board, when it was your money, what is the change now that they should listen to you? So I think the optics of talking about working group, we did not know. I mean, somewhere smacks of poor governance, even from these investors, large investors who run large funds globally. I mean, just because I think we have very, very loosely worded regulations around unlisted entities. I hope that the Ministry of Corporate Affairs is going to tighten some of these. A lot of them get away. They simply said, our share SHA changed and we're stepping down from the board. And we don't know what's happening.
Srinath,
So
they
I don't
are
think it's going
planning
to change
a
anything.
huge set of new norms for the big unlisted companies and startups, the Ministry of Corporate Affairs. In fact, we have done a story on this on News 9 Plus, a documentary, and we are suggesting that those who are watching this broadcast should go watch the documentary on News 9 Plus about reining in the unicorns of the country. Talk to us from that perspective. Do you think BYJU'S is that prime example on why there needs to be greater financial transparency when it comes to unlisted companies, which in India are these huge startups which have done so well for themselves in the last decade or so?
And Srinath, just to add to that, I believe cutting some slack for BYJU'S, we've done enough stories of when BYJU'S got it wrong. We've done enough stories of when they fought with their own board members, the board members resigned. Now we are looking at a rejig. We're also looking at a restructuring. We're looking at BYJU'S selling some of its assets, trying to monetize its business, getting better at people management. There is a rejig at the top end from the CEO, the newly appointed CEO. Would you then think that things are changing and far shifting to a positive territory for BYJU'S? It has learnt its lessons. I mean, to be fair to them, at this point, it looks like they're doing everything they can.
So, Shweta, let's draw the analogy of the great Indian family businesses we have, right? I mean, the patriarch or the founder might say, I've stepped down. But just in this case, if you compare it with BYJU'S, they're far younger. And are they actually going to run non-executive roles? That's a larger question from governance point of view. Otherwise, nothing has changed. I mean, they still control, almost brute majority of the company. They run everything. The new CEO will still report to them. And the world outside the three of them will never know what's the truth. The truth is between the three of them. And by the way, this is not about BYJU'S at all. This is about every single private unlisted entity. So the challenge for BYJU'S here is really, can they quickly monetize? And that's the opportunity they also have. Two, I think the debt lenders have run out of patience. I mean, there is a case going on there. They've seized this asset. So if you don't solve for debt, equity is anyway a risky proposition. The equity investors always know that whatever they've invested can be written off to zero. I mean, that's the premise of equity as a risk capital. So I'm not even worried about the equity investors. What about the debt lenders?
Okay. The debt lenders are also, in the latest that we know, looking to help BYJU'S in selling, both Epic and Great Learning, because those are the plans that Srinath, BYJU'S has for repaying its debt, which is a massive debt of $1.2 billion. Do you think there is a concerted attempt therefore being made, lenders sitting with the management and saying, hey, let's arrive at a solution. We've fought for far too long, but let's arrive at a solution, an amicable one at that?
I mean, I'm not a social media guru, but I'm just punning on the word. It sounds epic and great learning. I mean, I hope the lenders don't end up with an epic great learning out of this. So I think the challenge for them is going to be, they may not get the value that they're looking to get back. They might get a part of that value. But having said that, global lenders always know that they're willing to take a haircut. I think that's
in your assessment, sorry to cut you short, in your assessment, do you think Epic and Great Learning will not give the massive returns that BYJU'S is expecting it to? $800 million to $1 billion, that's the estimate?
So I think today a lot of this is rhetoric. I mean, I think they're keeping the optics alive by talking about valuations. The market reality for EdTech seems to have completely and drastically changed. And as I said, they were the poster boys of success for EdTech, and they're also today the poster boys of what could go wrong in EdTech. So I think it is a challenging moment for them, no doubt. Irrespective of management change, they may not get the valuation they are seeking. But the larger question is, will then the lenders say they're okay with the haircut that they get and move away? Or are they going to continue making trouble for them?
Okay, just to add to the puns that you were mentioning, there is also investor interest into Aakash from Ranjan Pai. So I guess sky is the limit as far as EdTech is concerned, even at this stage.
I mean, I think education, yes. I'm not sure about the EdTech part of it. I think that's a challenge what we have. We're still going back to that tutorial model, right? I mean, end of the day, the great Indian tutorials, the famous teachers in the local neighborhoods, again, seems to be the fashionable valuation. It's
Okay.
not those EdTech, unfortunately.
But Ranjan Pai's, whatever money he's pledged so far, and this is by the way of news item that is breaking this afternoon. There's no confirmation from our side just as yet on that, but it will have some sort of moral boost at least for the company, for Aakash.
Yeah.
Shweta, nobody pumps in money for moral values, right, or moral obligation. It's for absolute financial return. And of course, governance being part of it, I'm sure Pai will bring in a lot of governance aspect there. But if they see value in something, we really don't know at what valuation, at what discounts, and what are the covenants. A lot of it's still a private company. So a lot of these could be private covenants that they will be giving. And I'm assuming that if somebody were to pump in money, they will actually ask for management change.
Yeah.
If they don't, I don't know how
since
they
we're talking about Aakash, there are plans of an IPO, so it may not be a private company. It may just become a publicly listed company soon, in which case Ranjan Pai will also get a seat at the table. But Srinath, we've run out of time. Absolute pleasure listening to all the puns this afternoon. Thank you very much for taking time out. And as we continue to track the BYJU'S saga, there are fresh developments. Developments continue. We are given to understand that Aakash, a subsidiary of BYJU'S, is also eyeing an investment of 300 million from Ranjan Pai. That money could come in very soon and change the game, perhaps, for BYJU'S in the near term.